Hello.
Hi, hey team, hey team. You hear me?
Yeah, I
Yeah.
can hear
Okay.
you.
Okay, nice.
Good to see
Uh,
you.
yeah, good to hear you also. And
Yeah, yeah. Um,
well, yeah,
I
yeah,
I have something quite interesting to tell you,
yeah.
and I really would like to show you if you have some minutes,
Yeah.
because I think this is really something that uh, changed a lot for me actually,
Okay.
and I would like to show you.
Yeah,
Um,
so you can let me allow the screen sharing
yeah, yeah,
and and let me then uh, stop my screen sharing. And now you can share your screen.
yeah, yeah. Uh,
hmm
can you see?
Okay. Okay.
You see my screen?
Yeah, 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 yeah.
Yeah.
Okay.
You know this whole move here, this was the move where I did my back testing in and where I was not really happy about. And
Mm-hmm.
I tried to find out why things happened.
Mm-hmm.
And I looked much deeper into the structure. And firstly, I marked up the whole. I think this is might be even daily or monthly structure. I think they maybe daily structure these yellow lines.
Mm-hmm. Mm-hmm.
And as we know, we always want price to come into this range, this upper range here, like this one or this one, but it should not go above this one somehow. And we have this uh, movement of the
Mm-hmm.
price on the higher time frames like this. And this matches exactly. There's only one time where this does not match, and
Mm-hmm.
there's another thing that applies there, which is also quite interesting. We have this situation here where price did not come above this line because this low is quite high here, and so we have this extended move.
Mm-hmm.
But when we look at this one, we see price came definitely above the 50% level.
Mm-hmm. Mm-hmm.
So if I look at all the backtesting trades that I took here, most of the losers they were in these areas that were not really good for a trade because price was not above this one here. For example, here this one here, this was a quite good trade. Could have been held even much longer.
Yeah, yeah, yeah.
But this one was above this one, and also this one here that made sense because this one is already above this one here, so we have a reason to go down. And if I would have followed this structure alone, I mean, this is now on the 4 hours and daily.
Mm-hmm.
I think, as we know, price is fractal. It can be done on all time frames in a different manner. Then,
Yeah, exactly.
uh, for example, here when you see here. Uh, yeah, this one here makes sense. This one makes no sense. All
Mm-hmm.
these also make no sense. And here could be some trade in this area probably.
Mm-hmm.
And then here again, these they make no sense. Okay, this was not even this wasn't even a winner. This was okay. Uh, this one I think this was a bit unfortunate, but if I see here price comes above this area, then there's a really good chance to get into trade and find something in this area probably.
Yeah, yeah. So what is your main conclusion from all of this?
My main conclusion is that I have to look at the higher time frame structure and maybe even mark up the chart exactly in this way, so
Mm-hmm.
I know exactly, yeah, where's the high probability to get into the trade, and I could avoid all these losers.
Yeah, I mean, so first of all, I'm really, really glad that you have all these commands. So this is probably the first time I see this kind of post backtest analysis from you. Yeah, and
Yeah,
yeah, and
yeah,
this is something that comes specifically from you. So again,
yeah.
I was not ready to discuss this right away, but overall, it looks like really, really great work in
Mhm.
itself, and you should definitely continue to do it in the same manner. Yeah, so
Yeah.
actually exploring your own work and putting in your own words the concept that you know. Yeah, so
Yeah, yeah.
this is exactly what you need to do when you backtest
Mhm.
and when you
Mhm.
trade.
Yeah, yeah, I definitely I wanted to find out why this did not work out, and especially in something like this area, I had so many losses. And now it makes absolutely sense to me why this could not work out. I mean, if you're lucky, then sometimes you get a trade there, but it makes no sense getting into a trade here.
Yeah,
And
of course, because it's just messy. Yeah, it's just messy.
Yeah. And if I can break down this kind of system into smaller time frames, which I think is absolutely doable, then I could also have trades on a bit lower time frames, because apparently I don't want to have only a trade once in a month or something. And sometimes when you only look at these areas, then it's not that often, but it's definitely safer.
Yeah. So of course we will discuss these things that you wrote me and that you told me right now. One immediate addition that I could add to this is that, you know, when we look at structure, we kind of we understand that the price does not need to go to these areas. Okay, it does not need to go. It can turn here. So for example, these trades, they could make sense. But these trades, so let me finish my thought.
Okay.
And these trades could also make sense, you know, these two. But these four, when you see already that the price is really messy, and it happened already after the break, a long distance below the break of the recent low, now it maybe does not make too much sense. So this is my first point. And of course, when we see something like this is more probable situation. So if you are someone who is looking for a smaller invalidation zone, because now invalidation zone is smaller, but the zone that the price can go is bigger. So this is a better place to go. But then at some markets, in a really trending markets, what the price will do, it will never actually come back to the deeper zone. It will do some kind of reaccumulation here and go. Some kind of reaccumulation and go. This is something that you can see right now, for instance, on USD/JPY. And by the way, this is more applied to stocks, to gold, to silver, and so on. Forex, it tends to move more with a deeper pullbacks. Yeah, so this is. Yeah, and what did you want to say? What did you want to say?
Yeah. I mean, I found out here. I think I have to test this more to make this even a bit more reliable. But price always came back, at least on these higher time frames, to mitigate, basically the whole route of the move. Or it came back above the 50%. Even when there was a situation where price did something like this, as you just said, then later on, somehow it came whether to the 50% or even back to this area.
Yeah, I totally agree with this one. So do not delete this one. So what we have here is this, classical redistribution that we will discuss today as well, as we already discussed it a bit. And yes, definitely, price stand. So even if it did something like this, even lower, it could easily, or even something like this, it could easily go and mitigate specifically this unmitigated part of maybe higher time frame move, or this is something that I call SND 2.0. It means that it's just left. So I will discuss it a bit later. But yeah, definitely this is something this is something that happens in the market. Yes. So you can definitely test it. And again, if you want, you can implement the rule. So okay, I will not look for the trades until it comes like above 50% or below 50%, or until I see a deep mitigation.
One last remark also to this redistribution pattern that you said, when you have something like this,
it's like
then you expect price to go down, but sometimes it looks like this, and to me, I would assume this is a change of character probably, and price is now going up here.
It's like really simplified approach. So today we will discuss more complex, sort of we will discuss it. Okay, so I mean, this is looking like, again, this is looking really great. Well done, and continue to do it in the same manner. Okay.
Okay.
Is there anything else you wanted to share before we start like the session?
No, this was basically it, and I definitely will continue work on this because this makes so much more sense to me now. And
yeah, of course.
yeah, it was really mind blowing to see that this works this way.
Yeah, to be honest, because of because of your last message, when you were sad, like I became sad as well, because I became sad as well, and I was a bit worried, like if I maybe if I managed to pick right words, or maybe I was a bit too hard. Yeah, but I think you managed. Yeah, you managed to find some balance, and now you are ready to move on. Yeah, I guess.
Yeah, I mean, this is a bit the psychological part, and of course, I'm not that psychologically stable in trading or even backtesting.
Yeah, to be honest, I was sad because like we did some hindsight work, I had some examples for you, and I thought that maybe overall you are like more confident in the system overall, and like you know that it works, but like you realize that you just need to gain more experience. But then when I received your message, I realized that maybe you were not so confident overall that it works, or works in accordance to your expectations. So this is something I will discuss today as well. Okay.
Yeah. I think this last sentence that you said, in accordance to my expectations, this is really something very important because. As you said, I should not have any high expectations, and just making profit for today, for the time now, is definitely enough. And that's why I also said my target should be something like 1% a month at first, so I can try to build up on this.
So one second. As for high expectations, it's okay to have high expectations, and you actually need to have them, because this is a motivation, this is your vision. So maybe you are a person that wants to have like 10% a month. I mean, this is just fantastic goal to have. But the problem, problem with this goal is that subconsciously you're trying to reach it right now. And you need to break it. So you already started to break it. I see already that you like kind of transformed how you think a bit, just a little bit. And I mean, it's really fundamental. It's really important, to understand, to break. And for now, you don't need to have any kind of profit. So right now you will need to backtest more than you need to live trade, and you do not want to be a kind of a person or with a beginner mindset that, you tested like 50 trades and now you say like, oh, this route of the move is not working. But then I ask, where is your analysis? Why it's not working? Like the thing that you did and presented to me right now. So now I know that you came back, you saw what you did, and now you will do it once again. And every time you will be better and better. So
not once again, maybe 10 times or 20 times.
I mean, more than 10 times. Yeah. But then some point will come, and overall with the system, you will be more or less consistent, and you will move to live trading. And then you will face more challenges, like emotional challenges. Then you will understand that sometimes you will just miss a week, not because there is no setup, but because you have your outside life. And then you will look at the week you missed, and you realize that you missed a good runners, and then you will become like extremely sad, and then you will have to learn to manage this, and so on and so on. So you see, it's technical side. It's just a part of it all, and everything in a whole in you as a trader will require this like evolution, transformation, step by step. But you always need to appreciate what you are doing, and you always need to find this balance, because if you will not do it, it will all just crush you and you will quit. So it's like really complex matter, and you constantly need to improve your mindset. So yeah, this is basically the topic of the mindset part. But what I want to start today is basically from a technical perspective. So let me now share my screen.
Yeah.
Okay, yeah,
Perfect.
sharing my screen and opening my plan for our session. Okay, and yeah, so again today we will have this technical part and we will have some mindset part. Starting from technicals. Where are my technicals? Okay, so today I want to talk through once again, but with a different perspective about the context of the market. Okay. And if you remember from the previous session, we discussed many details about the context, but I worked on it myself more on systemizing how I can present to you, how I can use it in my own trading, which you can see in this latest weekly review. By the way, how many weekly reviews did you manage to look through?
5.
Oh, okay, 5. It's okay. So
Yeah,
you
I saw many different things, and it was really also really good to see how you get your winners and your losers. And
yeah.
I think in one of these videos you said, oh, you think you could improve with the system, that you took profit at 1 to 5 hour, and then the trade went 1 to 7 hour.
Yeah.
And I think it was absolutely okay, because I think that there's one moment for me, for example, it is 1 to 3, when I think, yeah, if you could now walk away from the trade and just take the profit, and even if it later on went to 10 hour or something,
Yeah.
it is still okay, and it's still a good trade, because 1 to 3 hour is good. Basically.
Yeah, I mean, 1 to 3 R is perfect. It's not good. It's a perfect, even 1 to 2 or even 1 to 1. But the question is how consistent it is and how replicable it is. So if you can do it again and again and again. So these weekly recaps, I started to do them like 8 months ago. I looked yesterday and 8 months ago. So, and by the way, yeah, later I moved to 7R profit target. I had some period with 7R, and then I changed my management a little bit. You will see again, but again, you will see a lot of mistakes that I make, and this is one more topic for today, that you will need to have a room for mistake, because people expect that they will have these rules and they will be able, so they underestimate how hard it is for many people to actually execute the system. And when you will see more weekly recaps, which I of course recommend to do, you will see a lot of mistakes that I make, and I will comment on them. And I hope you will learn. Again, I do not expect that it will like change everything for you, but you will take something from it. And
yeah, definitely a lot. And I also really like that you not only do the recaps, but you also it's like a small lesson every time.
Yeah,
sometimes you tell some things, how to do things, and that this is really good.
Okay, that's fine. Okay, so let's start with the context. So, what I did, I separated the context for basic things and advanced things, and then there are some secondary things. So basic is first for basic is multi-time frame analysis. So multi-time frame analysis and basic structure. Basic structure plus confluence. So what it means is that you just see the chart and tell, okay, what is my weekly? Is it like recent price action is bullish or bearish, or my daily? So is it bullish or bearish? You say, okay, it is bullish. Then what is my 4 hours? Is it bullish or bearish? Immediate structural shift. Okay, it is bullish. What is my 1 hour? Is it bullish or bearish? Basically, it's bearish from this impulse. And then you say, okay, do I have like 1 confluence or 2 confluences or 3 confluences? So you just do this basic multi-time frame analysis. And then when you see the market that has, like you know already, yeah, maybe 3 confluences or 4 confluences in one direction, then you already can assume that the confluence will work out and the market will continue. Yeah. So again,
I also think it is very, very necessary to write this down. So because you tend to forget, or at least I personally tend to forget such things very fast.
Oh no! You do not want to forget it. You do not.
Yeah,
want to forget
exactly.
It. So if you need, you can record. But what I want to tell
I mean when you do your analysis,
yeah,
you
of
should
course,
write down the daily is bullish and this
yeah,
one
I
is bearish
understand.
and so
I
on.
understand.
So you always see where you're currently in the market and what you want to see. Because I think you want to see the lower time frames also turn into that direction. So
Of course. So 100%. Yes, you're right here. And what is my but? My but is that when you will live trade, so you will analyze some kind of pair. Yeah, so USD JPY. And the thing is, multi-time frame analysis from higher time frames, it does not change often. So for example, when you will get to my latest at the point weekly reviews, you will see that I was overall bullish for USD JPY here. And I had some trades, I had some winners, I had some losers, but overall, all of my trades were to the bullish side. Maybe 1 or 2 were to the short side, but like 95% was to the long side. And when you come to the market every day, so let's say you are looking at this period of time and this period of time. From this period of time, daily was bullish from this impulse. So you come day by day and you are just bullish from daily. Nothing changes. You are bullish from daily, you are bullish from weekly. And then when you look at 4 hours, the only time 4 hours shifted to the bearish side is here. So one time it shifted to the bearish side. And it shifted to the bearish side in the model of reaccumulation. So even formally, structurally, or on the basic structure, yeah, it was one shift to the bearish side. Overall, it was still very bullish market. And even today, yeah, we have a bearish shift. And so you see day by day, you will have actually the same basic structure. So you will have just to analyze for the first time, and then everything after it will be the same. So this is something to keep in mind, that basic structure is basic structure, and basic confluence it's just a simple thing. You don't need to be crazy about it. And then next point, quality of the zones and quality of the moves. So based on your experience, yeah, we already discussed it a lot. So is it a clean move? Is it like overextended, not overextended? Is it a clean zone? Is it a full body candle, and so on? So quality of the moves and the zone and the zones. Then overextension based on structure. Based on structure. So again, are we looking at the market that just created like 10 consecutive shifts, and then we are looking to buy here? Is it a good idea? Yeah, is it a good idea?
Yeah.
Buy here? No, I guess it's not a good idea. Yeah, you need to wait either to this, or ideally for one break to the downside, or even 2 breaks to the downside. So these 2 breaks will not make this market bearish. I mean, it will not make it.
What does it make bearish then?
Yeah, I will tell you. I will tell you today. I will tell you like in 10 minutes.
All right.
Yeah, that's a really good question. Yeah. So again, overall, what is overextension based on structure? When you see, so for me, it's like 4 and more breaks, or ideally 5 and more consecutive breaks, again, based on structure. So it means that no low was violated structurally. And now here at this point, I expect at least 1 break to the downside to reset the count, you know? So now, we reset the count, and now we have 1. And now we can be more confident that this market like fueled itself up with these orders, so liquidated what it needed, and now it's ready to move even higher. But so why is this powerful? Because we can follow the trend. And so what is the weak approach to this? The weak approach would be this, that you see this and now you are selling like crazy because already the market moved so much that you just can't believe that it can go even higher. But guess what? It will go higher. It will go higher because this is just a trend, and this is just a surface, you know, this is just a basic structure that is obviously moving up. And then the only thing you need is to buy it up. And again, you will see this in breakdowns in CHF-JPY when it looked so overextended, like I showed it exactly on the chart on different time frames. And I was this person that could not believe that it could go even higher. And it went higher for days, you know, it went higher for days. So this is something that you need to be aware.
Just not deleted. One comment to this. I mean, when you see this move that takes out that low, and we consider this to be a reaccumulation. I think then what I experience is then you wait for the next break of structure to the upside, and then you go for some zone below this one.
Definitely.
And then you can trade it up.
You can do it. You can definitely do it. But the truth is, this is a good entry point as well if you confirm that this is reaccumulation, because because this move can be a beginning of distribution. It can be. So again, when we will get to the models, we will discuss a bit more. But this point, if confirmed with a good clean confirmation on lower time frames and development on lower time frames, it's a good point. So imagine this is the daily, and then you go to 15 minutes and you see something like this: downtrend, then up move, down, up, and maybe two shifts to the upside. So this could be a good confirmation at this point to go higher because of the overall context. So and by the way, I was also a person that tried to long here, for example, with not waiting for this overall zone. So you can be caught to the both side, and you need to understand that when you like really have an overextension, then it makes sense to step away and to wait a little bit more. But again, right now we are like mechanically discussing, and then but listen carefully, because you will do it in today's session. You will analyze the pair based on all these points, and so we will do it practically. So overextension I discussed. Now space to move from a zone. So this is like again what was discussed, but space to move, or some mentors call it free money zone. So what it simply means is that where are you looking for a trade? So are you looking at it here to go long, basically missing this move, or are you looking at it on the mitigation, like you discussed right now? And now, so what is the problem with this trade? Your invalidation zone for this bullish range is just huge. So could it work? Definitely can. But also we understand that market can easily do this pullback. And this is, by the way, my personal problem that I'm working constantly, even to this moment, that I can see, for instance, a range, and then I will start to confirm a bit earlier. You know, I have my confirmation. And the problem with this is that you will have a good confirmation here. You will have a good confirmation here. But the market will just mitigate lower and then give you a good entry. And
your stop loss should then be below this low. And so if you're in the trade too high, then you don't get a good risk reward ratio.
For me that's you can have a good risk reward ratio even here. But but you just need, again, remember, these context things are not yes or no to the trades. They are something, they are like a puzzle. They are like a puzzle that you just need to read from the price. So again, if you are entering here, you are just prepared that this could be a loser more easily than you could enter here. And And then there is one more place where you could search for a trade. It is here. So when the price didn't have a confident break, or imagine that this is a daily candle that started to go below the low but didn't close. So this is something that we can call an absorption, this short-term liquidation. And many times the market will do this and then go back. And then you can decide, either you will find confirmations here, or you just look afterwards, because if the market will not continue down from here for a break, but re-break up, now you have even more confidence that this range wants to hold in some cases.
Yeah.
So a quick example on the chart could be this. So as you can see, the market started to break. And at this point, you understand that this could be a possible absorption. A possible absorption. So in the moment that the price started to move down on lower time frames, most likely there was some confirmations on lower time frames here. So let's take a quick look just to illustrate it. So again, this is just in isolation. So maybe imagine, so I don't see anything for myself here, maybe in 5 minutes. So you understand that this is the high, the daily is starting to violate it, but then re-breaks to the downside. And then maybe you are a person that wants to try to take something from here, But again, so this is just a quick illustration of it all. So just be mindful, where are you entering? And so this is a basic context. And now you have advanced context. And first is the models in the advanced context. And this is something that I really propose you to pay attention to, and to start to learn about them. So models. Again, models are just a way to look at the market, to look at how it moves. It's possible to stay at this level and just look at the market from the standpoint of confluence. I have a student, Zoey, that I mentioned before. She is actually started to trade really well, and she mainly uses only confluence. She does not bother too much about like models at this point. Maybe now I didn't speak to her maybe in 1 month or something like that. But the next step is model. So what are the models? Imagine a market that is moving just up. So this is not a model. So this is just a classical trend, something that you saw on Euro USD on daily, so to the downside. This is not a model. This is a simple price action. And for the model, you need more complex development. For example, a shift to the upside. So which model could it be, as you already know? So we are shifting to the upside.
It could be reaccumulation,
redistribution.
Redistribution go lower, or it could be a change of character to go up.
So let's, for our session, just forget about the change of character. Again, if you can make it more simple, change of character for me, it's what is the difference between change of character and break of structure, for example, for you? In short.
Break of structure, you have several ones, like this one, or in
this is also structural breaks. This is also structural.
The change of character is always also break of structure. Yes.
Okay. But you see the problem with this change of character. So you say to me, for example, this is a change of character to what? To bullish side? Yeah, but you have only one shift to the bullish side. And this is what I want to tell you. And by the way, of course, now I propose you to see for yourself, is it true or is it not in the markets? And later after the session, when you will backtest, you will see for yourself that there's a change of character. And now when the market goes here, what you will do? You will buy or what? And many people will buy here as crazy. But the problem is, when you learn to see this as a model of redistribution, your expectation is that the market will just continue to the downside. And so first of all, At this point, this is just a possible redistribution, okay? We are not telling that it is like 100%. When you see something like this in the market, then you need to go to lower time frames or to higher time frames, okay? You can go to lower or to higher to confirm your idea. So you have an idea that this is redistribution and the market wants to go lower. You now need to find some confirmation on lower time frames, okay? Because it is not confirmed. The moment it will be like really confirmed when it will create a new break. So this is something that you told me before, yeah? So we need to wait for one more break. And then here, this is like a complete model of redistribution, yeah? When you have a break to the upside, now break to the downside, and now the market is ready to continue to the downside. And please do not forget that you can use all these models throughout the time frames. Okay, so you can read the entry time frame like this. You can read your middle time frames like this and your higher time frames. So this is the model of redistribution. Again, pay attention because now. So let's maybe find it on the chart. So let's do it a bit later because it's like a bit too early. Okay, so now reaccumulation is basically the same. You just move up, 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 and then down. So this reaccumulation, that's all. So really simple things. Now, what is accumulation and what is distribution? Again, you can, if you want, you can go and study Wyckoff more, but again, it's not Wyckoff that I'm telling you right now. It's just a part of Wyckoff, but just made more, not theoretical, but more practical. So what is accumulation? Basically, in its simplest form, accumulation is just back and forth. So when the price is moving up and then down, up and then makes a recent move to the upside. So when we look at something like this, with a recent structural shift to the upside, this is accumulation. So this is as simple as it is, as I'm telling you right now. So this is accumulation. And then, but again, do not forget why the market is so complex, because we are operating at the same time throughout different time frames. And then your job is to find different models. If you are someone that wants to use models like I do, for example, you need to go through the time frames and see other models, what other models are developing in the market possibly right now. So for example, this market could look something like this before. So it could go like this like this and like this. So how do you think, what is this model? So if we start to read the price from this moment, so what model does it remind you? Up, 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 and then down, and then up once again after this range. What can we call it? So up, 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 and one down.
Yeah, this is exactly this reaccumulation model.
Yeah, so this is reaccumulation. So for example, in a market like this, you see, okay, I have this reaccumulation if I look at this point, and then recently I had a stoppage in price, so actually a consolidation with a recent shift to the upside. And I can read this part of price action as accumulation within the larger reaccumulation. And and then you can decide that, okay, maybe until this breaks, I will be more bullish on the market. So that's it. So really, the models themselves are really simple. So you do not want to overcomplicate it. The market itself will complicate it. Okay, the market itself complicated. And and what is a distribution? So distribution is basically the same, up and down. And then recent shift to the downside. Now, while you are looking at reaccumulation and redistribution, a good, clear redistributions and reaccumulation, they will also move to with some kind of verticality, you know. So it will be some kind of a trend and then shift to the upside. Accumulation could be horizontal, like I described right now, or it could be vertical as well. So what is a vertical accumulation? So imagine a real standard situation in the market that you have a shift to the upside. So maybe this is your middle time frame, or maybe so imagine this is your middle time frame, like 1 hour, and then you are looking at entry at 5 minutes, something like that. And then you have you can have two kinds of pullbacks. So first pullback could be like this. So 1, 2, 3, 4 in the zone. So, and then you start to think, what is this model? So what is this recent model in the market? So if I ask you, if we start from this moment, so we disregard this, only looking at this, what is this model?
It looks more like balanced price action.
But what it's a bit of a trick question, but what is this model? So only 4 options: accumulation, distribution, redistribution, reaccumulation. Specific
distribution.
No. Do you see back and forth? So do you see the price going back up and down, up and down? What is the price doing here? So it goes down.
It's going down. Yeah.
So what is this model? It's no model. It's just a basic downtrend. So remember what I told in the beginning, that for the model to be in the market, you need a complex price action. So you need some shifts back and forth.
So some ranging like this one here.
Kind of, but now we just disregard. Now we focus here. So if I do something like this, what models does it become?
This becomes reaccumulation.
Why?
Redistribution.
Redistribution. So what is your expectation for this price action?
To go down.
To go down. Okay, really nice. So as you can see, so this is the first practical implementation that you can have from the models. So when you look for a pullback, you can start to pay attention to how it happens. So if your pullback develops like this, then it's just really bearish pullback. Basically at this point, there is nothing to look at least at this. I mean, from this information that I'm showing you. Even at this point, it's too early because it's redistribution. But now, what if I show you this price action? So it goes up and then it shifts to the downside. And then maybe it shifts to the upside. So what is this model at this time of price action? If but we are looking at this. So let me clean it up. So now we are looking at this.
Like reaccumulation now, and it wants to go up.
Okay, so you tell you reaccumulation. Let me show you reaccumulation once again. Up, 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 and down. Does it look like this?
No.
Okay, so what
I get the words wrong. I mean, we see here.
So let me read for you. Down, 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 up, up, down, up. So down, 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 up, up, down, down, back and forth with the recent up move. So what is that? So what is this model? So this is accumulation, you see, but it's a vertical. It's a vertical accumulation. So it's accumulation that includes some movement to the downside, but it's not a reaccumulation. You see, it's not a reaccumulation. A reaccumulation could be something like this. When the market starts to move up, then makes a down move. This is a possible reaccumulation if you look at this point of price action. Okay, and so
but I would assume at this point that, for example, we have this move here, and then we have this moves to the upside, and then I would assume that price does not break this one.
Yeah, but again, so you can do it. You can do it, but again, you just need to apply models, okay? And if you apply models, if you apply models, again, if you take only this portion of price action, Everything you have here is break to the upside, and then to the downside. Okay, maybe it could be a accumulation if you look at this, but it just does not make sense, you know, because you understand that. So right now we are more working with the pullback phase, you know. You understand that this is the impulse, and now I'm just showing you how you can practically apply the models to understand if you are looking at bearish price action or bullish price action. And again, objectively, if you are looking at models, this is a redistribution. If you are looking at this, so we have down, 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 or distribution. Sorry, so we have down, 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 then two shifts to the upside, and now to the downside. So it could be both.
I thought it would only be a redistribution if we break this low, so we go lower.
It will be a confirmed redistribution, yeah.
Okay, yeah, makes sense.
Yeah, so we are operating, you know, again, this is something that I think can be confusing in the beginning, but also it can be helpful for the mind overall to think in like possible model and confirmed model.
Yeah.
Because again, if you are someone that is looking for sells here based on the idea that this is redistribution, again, I'm disregarding this, okay? It's not. And if you are someone that wants to sell, is it okay? Yes, it is okay, but you are aware that this is just a possible development. Yeah, it is just a possible development. And then maybe you miss something here, and now the price breaks. Now you understand, okay, now you need to sell this, for example. But again, why it's important to understand that we are like operating at the same time in different models, because this exact price action, if we look at whole price action that we have, could be treated as accumulation. Yeah, for example, if we had this back and forth here, then up, then down again, and then up again, this could be accumulation. You see, this is why I told you that the market itself will complicate it. And your job is not, you know, our job is not like to see this down move before the up move and now expect that our zone will hold. You know, we come to the market, a place where like billions of dollars, like millions of participants, and now we just read the last down move before the up move and we expect it to work. I mean, for some people it will work, but only because they spent in the markets like tens of thousands of hours, and they just subconsciously read the price in its whole, you know. So this is my introduction to the models. Again, remember.
Yeah, but this basically means we have something in this area here, and we have to wait until we see a confirmation what it really is. So let's to both sides, and until we don't see that confirmation, we don't know what exactly it is.
Exactly, Tim. You are telling like 100% truth. And again, if you will look further through my outlooks, you will see this typical mistake that I make, that many people make. They start to buy from the zone too early. They start to buy from the zone too early, because where they are buying either in a just simple trend to the bear side, or they buy the redistribution. You see the problem? They already are buying here with the first shift to the down to the upside. But we know that this is the model of redistribution, which is a bearish model. And so in many cases, it's better to wait for back and forth, and so possible accumulation, and then maybe shift to the upside. And so this point of entry is much more powerful compared to this one. You will see this
is much more confirmed also.
Yes. This is much more confirmed, much more powerful. You will see this situation happening a lot, like constantly. Okay, you will see it constantly. Okay, and now, so based on these models, this is my answer for you, what is really a bearish market and what is really a bullish market. So first of all, for a really bullish or bearish market, you need a confluence of models. Okay? So what I mean by that? If you remember from the first session, from like basic structure, we said that first shift is not bearish sign. And that we said when we have a second shift, we can consider this as a bearish market. But now you need to like have a deeper understanding that specifically at this moment, even at this moment, this market could be bullish market. Why? Because on the higher time frames, we could have a really clear like maybe reaccumulation, you know, here. So this so if we look at this is just a basic downtrend, yeah, consistent of two breaks. Now if you look at this, this is still a possible reaccumulation, because we are moving in this bigger move, and we can suspect reaccumulation if confirmed from other time frames. And now if we look at this, now it's looking even more bullish. You know, we mitigated the zone and we created a possible reaccumulation. So you see this singular simplistic shifts of structure does not define the bullishness or bearishness of the market. So really, if you want to be like really bearish on this market, you need to zoom out or to go to high time frames and find distribution model or redistribution model on higher time frames and perfectly on middle time frames. Okay, so again, so you will go through it later yourself, but just remember, the bearishness and bullishness of the market is defined by the confluence of models. Okay, models and not basic structural shifts.
Yeah.
Okay, so you can even follow, you can even disregard the models and you can successfully follow the basic structure, but then you will have like really small amount of instruments to explain why the market moved like it moved. Okay, so is it enough for bullishness and bearishness at this point? Yeah? Yeah. Okay.
It is.
Is it more or less clear what I just said about the models?
Yeah, it is. It is. But basically, it means if we see price breaking a structure to the upside, we can't say it is bullish, or if it breaks the downside, we can't say it is bearish. So we need to have
some kind of a model,
more confidence, much more information to make this high probability.
Yeah, well said, exactly. We need to have more information, because what is the market? The market is information. And if you are looking at this and you are trying to predict your last down move before the up move, it will not work, because the market is so complex. It is mitigating this, it is mitigating this, it is in this model, it is in that model, and it happens at the same time. So this is something that people need time to realize, that the market is in different models at the same time, at the same time. And it is never fixed in a way that we want it to be. So what the people expect from the market? The people expect from the market that they will go and say, okay, like you are telling me about the models, so it is up and down, yeah, and now again up. So what is this model? If I ask you, what is this model overall? No, tell me, what is this model? So up, and one down, and now up again.
I would say it's a redistribution.
Think again. Maybe you mistake about the name. So up, down, and now up. So it is reaccumulation. Reaccumulation. So it is a bullish market, but again, the market does not. So because of the fact that we read the price in this way, first question: can we now be bullish? overall?
I don't think so.
I mean, if we just take in isolation, you know, if we know about the market only this, so we do not look at anything else, we can be bullish. Yeah, we can be bullish because this is a bullish model. But the market could be undergoing some higher time frames, some bigger zones, and one shift to the downside could make it a different model. But really important, before this happens, you could have a big amount and fantastic opportunities to go for the long side. So you see, the market is always transforming from one model to the other model, and we are not operating in fixed models, but in times between the transformation. So this is something really important to understand, that we can't demand from the market like to behave like we want it to, we want to behave, like we read it, okay?
But exactly at this point here now, I would say we can sell here, because if we want to go more up, then we're still expecting a pullback.
Oh no! That's a really big problem that again a lot of people have. You can sell, but not because of the reason that you want to go to the downside. It's a really bad reason to sell. Okay, so you can sell if first you will find multi-time frame confirmation for sales. So maybe you analyze the market and you say, okay, I will operate from this bearish shift. I understand that maybe other time frames are bullish, but institutionally we are still inside this bearish move. So this is my first reason. Then my second reason, that I see this model as a possible redistribution or distribution after one shift to the downside, maybe. So I will sell here. Maybe you will find other reasons, but let me really emphasize, team, on this, that many people come to smart money or to any other concepts, and they do like this. My market is extremely bullish. Everything is bullish, and now I have this break, and now I know that the market needs to go to the downside, and now in extremely bullish environment, I will sell. I will sell because it needs to go there. I mean, it can be the reasoning for a sell, and if you will have this mindset, you will be burned like too many times. So sometimes it will work. Yeah, I mean, so again, you can sell, but not because of this. You need more reasons for it. The market, I mean, if we zoom in right now, the market does not need to go here. And again, there are many reasons for this. First of all, we have this bigger zone. So again, we will not stay for it too much, but we have this bigger zone that is mitigated. Everything here was mitigated. Maybe something on lower time frames, like this unmitigated wick, and we're already starting a reaction to the upside. This is internal structure building up. So at this specific moment, we will analyze USD/JPY. Everything is pointing only to one direction, and this direction is up. So if someone will sell right now to this unmitigated candle, it most likely it will be just liquidated. So again, and by the way, I'm really separating analyze and execution. So I could tell, you know, like, let's come back in 2 weeks and see who is right, who is wrong. It does not matter. It does not matter, because this is not our edge. Our strategy is not selling into buying. It's like really a beginner's mindset. Okay, so we I hope we finished with this one, and I mean, we can come back to it, but not today. And then, so this is models, and let's quickly do. And again, models is a part of advanced context. It's just a part of the overall understanding about the market. So now let's do a quick exercise about the models. So what is this model? So this model,
basically, this is firstly, this is an uptrend.
Yeah,
it's going up.
So it's an uptrend. And is there any kind of a model here? So we are moving
just in this part, you mean?
Yeah, just in this part. Yeah. Up, 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 up. So we are moving up, 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 and up.
I don't see any model.
Yeah, so this is not model. So again, remember, the market could be just in a simplistic structure. This is okay as well. So we can still continue to buy if we ignore the rule of overextension. Yeah. So this is not a model. What about this part of price action? So what about this part of price action? So let me. So you think, and I will write. So this is down structurally, then up.
Yeah.
Then so we can consider this as an up break. So I will just formally apply the rules. Then one shift to the downside, and then up, 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 up. So basically, down, up, down, up, up, up. So what model could it be?
It could be redistribution to go down.
Okay, it could be a redistribution, you say. So let's paint redistribution, classical redistribution, down, 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 up, or maybe two shifts to the upside. So and so this is redistribution, yeah, agree?
Yeah.
And let's schematically show this. So we are starting with this down break. So we have a down break, then let me show from here. Down break of some kind, then up this. Then here we have so here we have shift to the downside. And now so structurally I can't see here, but if we see structurally, then basically we have this up move, and then structurally we have only one shift to the upside. So we have but let's just for better illustration, let's consider this as breaks, because it's just logical. I just can't see if so we have down and then sorry, let me do it. So we have down and then up, up, up. So does this looks like this? So could it be and we have the last shift to the upside, as you can see here. So where is so we have down, then we have down, up, then down, and then recent shift to the upside. Could it be a redistribution?
I mean, if I look at this leg here as one move, then I would say it would fit to exactly this model.
So again, so yeah, maybe it's a bit more complex, but the difference between two models here and here, so this could not be a redistribution. Okay, let me explain why. Because redistribution will not have back and forth of any kind except of the last portion of price action. You see, we have back and forth here. So we have down and up and down and up again. So and then up. So what it could be either accumulation, or if you want, it could be like up, then down, and then up again, like a small reaccumulation. But overall, it's obvious accumulation. Because
it looks more like accumulation.
Yeah, because we are moving back and forth and then up. So this is accumulation of orders to go to the upside from the model standpoint. And so remember, any reaccumulation and any redistribution will not have this. And so so this is not a redistribution because of this back and forth. At the same time, if you have down, 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 and then up, and then maybe up here, this could be treated as a redistribution because it didn't have any back and forth before. So it's just as you move to the downside. And so okay. So as you can see already, already we argued a bit about is it bullish or bearish. So you see the complexity here. Now let's go even further. let's go even further. What is this model? What is this model?
Oh, let's see.
So like in 10 seconds, what is this model? I will show you this. 10 seconds. Yeah, like keep it simple. What the market is doing here? Is it moving up, down, or back and forth with up shift? Yeah, so
I see here. I see a lot of back and forth here.
Yeah.
In this area. This is the first that comes to my mind here.
Yeah,
I see here we have some structure going up definitely, and after this we have this accumulation phase here.
Yeah, I mean, so it is all accumulation. So you see, it is all accumulation at this point of time. Why? Because let's just draw it. Up, 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 down, up, a bit down, up, down, 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 then up again, down again, and up again on internal structure with a recent down move. So what is this model? This is a classical accumulation.
Yeah.
And now if we see this, what is this model at this point of time? Specifically from this portion of price action. It is a distribution. So you see, yeah. So you need to keep it more simple. So right now we don't need to be like crazy specific. I mean, we are crazy specific. So this is specifically distribution in its form. So again, why it's not so important that it made a shift to the downside, and now I'm telling you that this is a completely different model. Why? Why do you think it's not so important that we have either distribute?
We are still going back and forth here.
So no, I'm like asking from a bit different perspective. It's not important because we will have other context elements to the market. So even if it will shift to the downside, we will still have models from other timeframes. We will still see how the lower time frame develops, and we always can have. So even if this is like a shift to continue back and forth, we will still go to lower time frames and find good confirmations for good entries. But we will just take it into consideration. So again, it's not so important what your specific time frame model is, because it's not the decision to trade. The decision to trade will be based on more complex things like confluence of models.
Yeah.
Okay. So and tell me maybe let's finish with this one. So so let's finish with this one. What is this model? Specifically this one. And now you can operate with possible and confirmed models.
Yeah. I mean, what I see here is we came up here and then we move a bit lower. So I would think this is a reaccumulation.
A possible reaccumulation, yeah?
Possible reaccumulation, not yet confirmed. Yeah. And
so can we trade to the, can we start to look for longs at this point?
No.
Can we start to look for confirmations?
We can start to look for confirmations.
Yes. Yes, definitely.
Yeah.
And by the way, as you can see,
confirmations to go long, which is probably this move already here.
So this move,
enter here.
Yes, this move is a specific example of how reaccumulation worked out. And if this is your change of character, you will start to sell here.
Right.
Okay. Okay, so yes, I agree. This is a possible reaccumulation after reaccumulation. Basically, no, this is not even a structural shift. So this is a possible reaccumulation. So now if we go to here.
This looks also a bit like a reaccumulation because we broke lower here. And then
Yeah, I mean,
up.
if this is a structural shift, then yes,
Yeah.
it's definitely a reaccumulation, but it's
so this is even something like 2-in-1 because we have this one and we have this one.
So the market is moving like this. The market is moving in up, then reaccumulation, up and reaccumulation. So this is how the market moves. Okay, and what is this model at this time?
Basically, this is just an accumulation.
Why? Why this is
just going back and forth and not really breaking to one side. And after this one, I see.
Let's draw it. So we have up, 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 maybe down here, and then up, and down, and then up. Yeah, so definitely it could be treated as a vertical accumulation because of this. Yeah, so because we can tell that like this is back and forth, but in the end you arrive that this is either accumulation or reaccumulation, which is basically the same things. Yeah, so they are bullish. So you can be you do not need to worry about like how to say it, like be mistaken about the accumulation or reaccumulation. You need to be worried about mistake about distribution and accumulation, or like between the bearish and bullish models. Great. Great.
Is this basically also something like these models, these AMD models, where you have that accumulation, manipulation, and then going to the upside?
Yes, but again, so
this manipulation is
yes, manipulation is reaccumulation.
Yeah, exactly.
But can you tell me again? But can you tell me the problem with this kind of thinking? So if I tell you that this is like a possible AMD or something, so what is the problem if I tell you that this is your pattern and now you should trade it? What is the problem?
You need to have additional confirmation to trade it, because otherwise you will be get on the wrong side. Because when you have when you have it that price, especially here you see price moves up here and also moves down here. So which side is it? So you need to have some confirmation.
Yeah, but again, you see the problem, you already started to be a part of this problem. The problem is the market is not this pattern. The market is this, and at the same time the market is this. At the same time the market is this. So the biggest problem with any kind of pattern is that it isolates some kind of price action, and then the people start to think that the pattern is the main thing, but not the pattern the main thing. The main thing is the market overall, and you can interpret. So many people want to be as mechanical as possible, and you can be as mechanical as possible on the execution stage. So if your execution of your entry after you analyze the context, then that's fine. So you can even if you want entry with a break and retest of support and resistance, you can enter with trend line, you can enter with like impulse, consolidation, or in triangle and breakout. But the problem, if you are not reading the context of the market, you will be wrong, as you said, about the direction overall, and you will be caught on the wrong side. And so it's not so important so again, this is entry pattern. AMD is entry pattern. AMD is not about reading the market context. And and today I want, of course, you to start thinking about this context in all the aspects that we discussed. So okay, I think that's fine for the models. And then the next point of advanced context is chains. So we have models.
One thing for the models. Do you know as you just saw, I'm not that stable in, or not that confident in always knowing which model looks like which one. Do you have something like an overview where you have clean examples of models?
Yeah, so I mean, these are the only clean examples of models. So reaccumulation possible, confirmed. Back and forth, up, accumulation. Back and forth, down, distribution. Sorry, this redistribution course, and up and down, accumulation. So if you know this, basically that's all you need. You do not need anything else. Why? Because again, I mean, because this is basically how it all looks, and we will analyze right now. And then when you will do backtesting, when you will do your homework, you will work through the market, and you will see that finding models is not, I mean, it's not hard. It's just really simple. So this is the only schematics you need.
So we have redistribution,
reaccumulation,
reaccumulation, redistribution,
yes,
accumulation, distribution.
Yes, and that's all.
Okay.
And then we have confluence between them on different time frames. And so why? So I do not think that the problem for you is to identify these patterns. Probably why you asked me this is because the models, they are playing out as I just said. So this is the model maybe on lower time frames. This is also a model. This is also, so they are fractal. So this is the problem, yeah? Probably, I think. But again, so the hardest thing to read is probably when you have like a big chunk of price action, you know, and then you say, okay, so what are you trying to tell? That this is accumulation because it made this shift to the upside, and now it is a distribution. So what is the point? Yeah. But the point is that you can analyze throughout the timeframes, and when you do it, you will say this, okay, what makes sense? So on weekly, this looks like this. So this is a weekly, like up, so up, down, and now moving up. So this is possible reaccumulation, or reaccumulation. Now, when we know that on the weekly we are in a reaccumulation, does it really make sense to try to analyze what is happening like here, or like to be really precise with the chunk of price action that we will take? No, it makes sense to analyze maybe like this part of price action, like this, sorry. So this part, or maybe this part, because we know overall on weekly we are in a reaccumulation, so more or less bullish, and now we have accumulation on daily, so one more bullish confluence. I mean, it's clearly not a distribution, not a redistribution.
It's, that means if we know that we are in a reaccumulation on weekly, can we then find the confirmation on the daily, on the lower time frame, to trade this reaccumulation to the upside here?
Of course. So I mean, this is exactly what
probably something like this here, that we find something here.
Yeah, definitely. So this is exactly what I told in the beginning, that remember that all the models and everything that we discussed is fractal, and you apply it to higher time frames to find context on higher time frames, but you also apply it for your entry time frame. So imagine that this is 1 minute time frame. So imagine this is 1 minute time frame. Could it be a 1 minute time frame?
Why not?
I mean, 1 minute time frame looks exactly the same, the same. And now, could it be a 15 minutes impulse? This one. Yes, I mean, it will look exactly the same on 15 minutes, or maybe 1 hour. Okay, I don't know. And now you understand that this is reaccumulation on 15 minutes, and now you are looking at confirmation on 1 minute. You start at this point, so you come to the market at this point. So let's play it like this. So again, and now you understand that this is your impulse, and this is your pullback. So now you understand that it makes sense if we are looking for something bullish. So it makes sense to wait until this model will change to the bullish model. So we just look like this: bearish, bearish, bearish. So this is a simple bearish structure. Okay, let's wait. So we have first bullish shifts. Now, is this a bullish model at this point, or even at this point? So, or even at this point?
Not yet.
Yeah, not yet. Even here. So for some people, it's already a confirmation, and that's fine. That's fine. But the problem that it is a bearish model. Okay, this is a bearish model of what? How can we call it? So down, 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 up, and starting
redistribution.
Yeah, so this is a redistribution, which is a bearish model. So if you are someone,
but we see here that we have this structure here.
Yeah.
And this one, and we will move lower here.
Yeah.
So probably then we find another confirmation in this area to go long.
Yeah, definitely. But again, so what you can do here is but not exactly, you know, Tim. So we can find confirmation later. But if we are traders that we have models as a part of our plan, then there is basically no way that we can find a bullishness here. Why? Because this is definitely a redistribution. There is no way to interpret it in different ways. So this is an early entry for us, too early entry.
Okay.
The only thing we could try to find is to try to say that this is accumulation. But is it accumulation? Because we have down, 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 and up. So this is not accumulation. We don't have back and forth. If we imagine that we have maybe up and then down and then up again, this is a different talk. This is already a possible accumulation within the bullish environment. But again, it's really important. So why it's important to isolate the price? Because of course we know that the price is bullish overall, but we need to isolate our confirmation to not enter too early. Okay, to not enter too early. So now let's wait. So this is still a bearish model. So coming back to the question, what is bullish, what is bearish? So let's see. Let's try to see if this is already like a bullish market. Or just if we have at least some kind of confirmation to the bullish side. So if we look at this price action, probably this is like, and by the way, I forgot to tell, when you start, this is first sentence that you start to tell, like, you know, this is bearish, but now it's maybe starting to go bullish. So this is exactly the moment between the models. Yeah, you know, that we have a redistribution, but now if we look at this, then maybe it is an accumulation. If we at some times at this moment it will be an accumulation. Why? Because the market will break here. So just exactly at this specific moment the market did not break here, and what we have is just down, 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 and two shifts to the upside, which is possible, which is a possible redistribution still, but not confirmed. And then of course so I don't know if we will have something from the model perspective, but let's just play. It's like the end. It's the end of
recent price action.
It's just recent price action. But again, ideally, if you are someone who is trading models, you will wait then for maybe one more shift to the upside and then shift to the downside. And now at this moment, this will be the first time when you have a confident confident reaccumulation possible. Possible, but confident reaccumulation.
Why do we have to wait for this 2 times?
Again, we don't have to wait. If I was trading this, I would maybe try to enter here. So to enter here and then enter here.
I wouldn't enter here. I would enter exactly here.
Okay. Maybe
because I see here we have this. I see this one takes out this low, which makes it a reaccumulation. And after this, we have bullishness. We see price does not want to go lower here. And probably
So,
we can get into trade.
Yeah, we can do it. So again, I'm just explaining more simplified based on real structure. Okay, so this is actually, oh, I see. So we even on real structure we had this shift to the upside, as you can see, upside and then downside. So so I was just explaining with a thought that this is one move, and I just kept it really simple. And that's why if you want to have a reaccumulation, you ideally wait for 2 breaks, because if you have one break to the upside and then one break to the downside, it is just nothing. It is just no model. It's just back and forth. So it could be that or so again, you see, you can interpret.
So this would be the first break here, and the second break would be somewhere here.
So structurally, let's see. Yeah, so structurally, the first break is exactly here. And this will be the low, and this this low never broke, but it seems, we had second break here, and this is the break to the downside. And so again, bullish break happened here. But then, of course, you can include internal structure into this, and so you can make it even more complex. You can say, okay, this is a bit, so this is a structural move to the downside, but then look at this clear internal structure built up. So does it make sense to try to long here? I mean, for me, yes, because if I tell you, okay, I want to look just a little bit with internal structure, and suddenly this is a perfect accumulation here. So when
probably should then adjust your targets, that you probably, if you enter here, you don't aim somewhere here, but your first target should be somewhere here probably.
Again, targets, for me, targets is not a part of technical analysis. For me, targets is a part of management.
Okay.
Management could be different, and it heavily depends on your personality, in my eyes. Because again, our job is not to hit this kind of target or that kind of target, or like 3R or 10R, or like take fixed profit or trail. Because to be honest, any kind of bullishness that you take from here, the target is this one. And even more, the target, so if we look at monthly, if we say that this is a development of trend, that your target is this, if you are some kind of a bank, your target will be defined by your back testing, and then you will see how your trades develop, and you will see what targets suits you. There could be infinite numbers and ways of management, but of course, if we're just looking technically, then the market should take this, then it should take this, and this, and so on. Of course. So these are the introduction to models. Again, in my recent like 4 or 5 recaps, I started to implement them more actively. And one thing that you need to understand, that we already had these models in this strategy when we are applying multi-time frame analysis. Because when we are just reading usual structure, I mean, if this is bullish, and now we wait for a return to a higher time frame zone, and we go to lower time frames will look like this, let's say. So basically it's back and forth with a confirmation to the upside. So we were operating in the models already. So the kind of concepts, they already included. But if you actually consciously apply it, you can have better and more precise entry points and better analysis overall. Okay. So and then second thing for advanced context are chains. So again, we started to discuss it a bit. I will just quickly recap. So there are two types of chains in the market. First type is partial chain, when the market is moving up, and then maybe up and down here. So this is an example of, and maybe something like this. So this is an example of a chain. So this move created a chain mitigating this bigger zone.
Yeah.
And this move created a chain mitigating fully previous range, but this move mitigated bigger zone, but didn't mitigate all the way to the last unmitigated portion. Okay. And so when the price comes back to this zone, this is specifically this place is a really powerful place to look for entries. Why? Because we know that the market created what we can call a full chain, or in one word, some call it a cluster. Yeah. So we know that before, so this zone fully mitigated previous range and created a break. So this is like a really nice chain. A good example you can see here. So you see full mitigation, break, full mitigation, and by full mitigation, I mean mitigation of the last unmitigated portion. So you see here it's all mitigated until this hidden S&D here, this one, and then it mitigates it. So let me close up a bit. So as you can see, we have unmitigated candle, mitigated. Everything here mitigated, not mitigated, mitigated. So this is a chain. And when you can identify a chain in the market, then you can be more confident in an overall analysis. Yeah. And then again, chain. Now, this is an example of this kind of chain. Why? Because it broke to the upside and mitigated bigger zone, leaving this zone. So this is still a chain which we can identify. So, and maybe it's enough for the market, but maybe the market will do something like this. It will break and then come back where? Maybe to this, because this was unmitigated. And this kind of zones, they could be, sometimes they could be treated. So this is like maybe for the future discussion, they could be treated as their own structure. So when we see these unmitigated zones that are left, sometimes it makes sense to say that this is not a structure, but this is our structural move that we have an idea to confirm. So this is
it looks like a reaccumulation. But in fact it is part of the chain.
Yes. So definitely, this is a really good way to describe it. Is a reaccumulation plus like a completion of a chain, something like this here. And this is also happening in the market a lot. So this is basically everything you need to know about the chain before you go and try to see them.
So if we have this chain and we see that price makes this move, which is somehow a bit overextended, and then comes back to the chain. So this could be a very good opportunity to go here. Yes,
when you have a chain in the market, this is a good opportunity. And again, you will see live examples. And again, it can be applied fractally. It can be applied contextually overall. And so again, when you see this kind of price action, you need to try to see how the market developed. Yeah, and it developed exactly like this. So it created this fractal break here, mitigated here, created this, mitigated this, went up, and went all the way back to this. And this is not only a zone, this is a part of overall chain here. Yeah, you see? 1, 2, 3, and then it's internal chain, and now, and so when the market will break this, so basically this point is the last point of a chain. Everything here is completed, as you can see. And then when the market will start this break, and it will be here, our expectation could be much more bearish. Because what is the reason? So this is something that you will see.
This is all mitigated below.
What is the reason? The chain already broken, everything's mitigated. So maybe now the market wants to go even lower, you know? But before this happens, it is a really, really bullish market. So these are the chains. They are really good, not only for, again, context, but also at entry timeframes. They are really, really useful. When you start to see this wave-like movement, then these points are really good for entry, and usually these are well protected, and you can use it tight. But again, usually, sometimes the market will do this. Okay. Okay, and now let me quickly check. Okay, so yeah, this was the difference between basic and additional context. So now, to be honest, I wanted to include the analysis on the session, but now I think let's make it as a part of a homework when you will go like, okay, I analyze some pair, and now first, what is my basic structure? Second, what is my quality? So basic context, yeah, and then additional context. What are the models on a higher time frame, on middle time frame, on entry time frame? What is my chain? So you will actually go by this checklist, and in this way you will have a really good analysis, okay, as a part of your homework. Okay.
Yeah. Okay.
Yeah. So we save some time for the mindset part, and then let's finish the technical part for today, and then let's do a quick break. Okay. So to finish the technical part, I wanted just to say that when you will backtest further, like demo trade further, and live trade, I really recommend to do this post backtest analysis and post live trade analysis. So something like I do for myself, because these weekly reviews, of course, I do it for you, but I also do it for myself. I mean, in the first place.
Yeah.
Because it's extremely useful. Okay, it's extremely useful practice that almost no one does. Okay, so what a beginner usually does is just like trading, never coming back to what he did, and like he has some backtesting, and like moves on and on and on. Like, I'm sometimes surprised. People tell me like, I backtested 1,000 trades. Like, I'm cool. Okay, I mean, but how did you do it? Like clicking like crazy, fast, not thinking, like, and now you need to analyze this 1,000 trade. To be honest, it's better to backtest 100 trades and then do complete analysis of what you did.
Yeah.
Like
so you can learn from the mistakes.
Yeah, it's much more powerful.
Yeah.
So this is something that you will need to do, and just for your plan for the next. So what you actually need to do next is actually backtest, and how long you need to backtest. You need to backtest that at least your 100 trades shows profitability. Okay, so for example, if you will have 20 RR profit after 100 trades, this is excellent result. Okay, this is considered excellent result, and now you can move to demo trading, or to demo challenges for funding prop firms. And now you need to start to think how you see the live market, how you trade day by day. But important thing about demo trading is that you need to try your best to imagine that this is actually your live account. Okay.
Yes, definitely.
So rule following should be the same. So risk management should be the same. For example, you want to go like for 50K funding. Yeah. So you already need to start to see what kind of prop firm you will choose and what kind of evaluation they have, or maybe start a 50K demo trading account. So you get used to commissions, you get used to lot sizes, you get used to everything, and you need to just forget that this is demo. So this, for you, it should be like a real challenge. Of course, it will not be. Okay, it will not be like in real life, but it will be really close, because people get emotional on demo. So losing will still hurt. Like having losing streaks will still hurt. So it will be real close if you try. And then, of course, you will need to move to live trading. And yeah, but maybe by that time, I don't know, it will be in several months. Yeah, it will be in several months. So again, if you continue in the same manner, but with being more grateful to yourself for what you do, you will succeed. Okay, you will succeed. But always remember, you need to put some places for stupid things. Again, you see in my recaps, I do so objectively I do a lot of mistakes. Okay, I do a lot of mistakes, but they are still a part of my room for this stupidity, for these mistakes. So people expect that, like, you know, they will make a decision that I will now not break anything. I will just be perfect trader. It will not happen for 99% of people. So we will still make some mistakes. The thing is not to make them catastrophical. Okay, and if you are functioning as a trader for 1 year, for 2 years, for 3 years, you will be okay even with some bad mistakes. Okay, but just not allowing the tilt, not allowing the full destruction of the account, and you are okay. So you do not need to be like this crazy god of trading for the next 5 years. You know, maybe in 10 years you will be like super great. I mean, you could be you could be like, but give yourself that time, you know, 3 years.
I mean, if I'm consistent and in the far future I make something like 10%, still make something like 10% a month, I think that's really, really great.
Yeah, I mean, 10% a month on a funding account, you will be like a millionaire, okay? A dollar millionaire. It's 10% a month is if
the
done
account is big
consistently.
enough,
It's not even enough. It's like more than enough, because 1% is already enough if you're trading like 1 million account, you know. And now with current prop firms, 1 million is possible. But again, you need to start. Okay. Yeah, I mean, Mind Funding, they have 2 million accounts. Yeah, but we need to start in steps. So, you know, maybe start with 20K, then move to 50 or 100K and so on. Because commissions, commissions and lot sizes, it's a bit different. Okay. And of course, one more thing for your trading plan is daily limit loss. So this is extremely, extremely important metrics that you need to have. So you either need to have like 4 losses a day. So for myself, I have 4 losses a day. So I do not want to. If I lose more, then it means that I'm like completely wrong about my ideas. So this is something that changed a lot for me. Or you can have like in dollars, or you can have in percentage. So maybe not more than 1% you can lose a day. So this is a good.
I mean, this is more or less the same, because normally I saw that you change your risk sometimes.
Yeah, I change sometimes.
Currently, I don't do this. I always try to use 0.5% as my risk.
Okay.
And
so 0.5% is a bit too much if you want to get funded. Okay. I would recommend to learn to trade with 0.25. Okay. Or maybe 0.35, because 0.5%, again, you can lose with any strategy 3 trades in a row easily. And if you are risking 0.5, now you lost 1.5% in a day. With a limit loss of 10%, it's like huge damage to your account. So so I risk like this, starting from 0.1 to 0.5. So basically my biggest risk is 0.5. But I find that if you have risk to reward 3 and more, then 0.25 is more than enough, because your winner can give you 1% of the account, and it's a huge number. Okay, when your winner is 1% of a funded account, it's really a good number. Okay, and then as a part of your homework, when you will move to demo challenges, there will be a rule following challenge. So this is simply when you have some rules, some checklist, and you try to not break them as long as you can in a row. So maybe you start with 10 days, so 10 active days, you are not breaking anything or almost anything. So like small breaks are possible, but not, you will feel yourself. Is it like a real break or is it just a minor one?
Yeah.
Yeah, so everything, so rule following we will discuss later, because I will still, after this session, you will still have some homework and I will support you. And even after that, so we will be in touch and I will be there
That's good.
to help you. You know, like even sometimes with some students, we just talk, just maybe have a short phone call. That's fine,
Yeah.
And now that's all for the technical side. Let's take 5 minute break. So I will
Alright,
do everything online, just turn off my mic and see you in 5 minutes, okay?
All right.
1 2 1 2. Hey team.
Okay.
Hey team.
Yeah. All right.
Oh, hey team.
Yeah.
1 2. Oh.
Yeah, can you hear me? I can hear you.
Where is my mic? Oh, okay.
It's all okay.
Hey team.
Yeah, I can hear you. Hello? Hello? Can you hear me? Hello? Hello?
Oh, hey team. Ah, what? Ah, I can hear you. Okay. But you are not talking, yeah?
Yeah,
So can we
I'm
continue?
talking. Hello? Hello? Test 1 2 3.
Okay.
Hello? Can you hear me now?
Hey,
Hello?
maybe maybe you turned off your mic to the left side or somewhere on the Zoom, you know?
No. Damn, what is this? One moment. Where is this? Where is this?
Maybe we will restart.
Hello?
Oh, okay. Can you tell something?
Yes, yes.
Oh, nice.
Now you can hear me.
That's from my side. Sorry.
Okay,
That's from my
you
side.
muted me.
Yeah. No. I muted and then remuted, but I turned off my sound on computer while I was resting.
All
Ha.
right.
Okay, now we are ready to continue. Yeah, sorry
Oh
for
yeah,
that.
yeah. No
So
problem.
let's do some now mindset work. Okay, now
Yeah.
mindset work. So to be honest, there are a lot of things. So when I receive messages like that from you, I have a lot of things to discuss. Okay.
Mhm.
So yeah, let's start with this. So first of all, you should never. So these things that you are telling to yourself, yeah, telling me, you are thinking. You need to understand that some part of them are just automatic reactions on what is happening in the market. So, for example, a good example of this situation is So let's break down a different example and then your situation. So for me, automatic reaction, for instance, if I don't know, so let's just continue schematically. So I enter in a trade, the trade runs good to take profit, and then I close as I intended to with my management plan, and then the price, of course, because the momentum is here, it does something like this. So for this trader, for me, for example, everything is really good, profitable day, good week, it's all okay, strategy is working, but my first thought that I lost this profit. Okay. So if I'm not conscious that this is just so first of all, this is just my first reaction. Secondly, this is natural. Third, is it rational? Basically no, because if I will continue to be in this spiral, I will start to blame myself. I will start to think, oh, why do I have this management and do not have that management? And so I will have this narrow thinking, narrow view. So you need to start to filter everything you think and everything you do and everything you say in the market. And outside of the market that is connected to the market. So for example, you need to filter out, you need to look at this a bit from the side, because you need to understand that we are operating in a highly emotional environment, okay? It looks like it is not emotional, it looks like it is just candles, it's something like abstract and so on, but it is highly emotional for most of the people, okay? So what I noticed is that maybe really experienced traders that are so they are so used to failing, they are so used to losers, and they are for so long in the market that their belief system is a bit different from ours, that they just know that they cannot lose in the long run. So they will even have a losing streak, but they will basically continue to do what they do, and they will not be affected so much. But
because they know about their consistency.
So they have been consistent for so long that they became a bit immune to emotions. To some extent. But again, if you're trading below 10 years, I guess, then you should not expect from yourself to be like a monk master or something like this, or like a full bulletproof person with no emotions. We are emotional, but we need to use our brain to work with these emotions. And again, you are looking at your thoughts and you are not accepting them in the form they present themselves, okay? So for example, when you tell me this will not work, I'm frustrated, like my backtesting is bad, like these results are not good for me, and stop. So next time, do not stop there. So start to analyze. First of all, is it true? So is it objective what I'm telling? So am I really will not pass any kind of prop firm with this kind of result, And then you see you have some profits and you say, okay, but it seems that if I will replicate this bad result, as I said, bad result, if I replicate it several times more, I will actually pass it. And then you say like, but it will take 1 year, it will take 1 year and it's a catastrophe. Start thinking about it. Is it really that bad? But if I will get a funding like for 200K in 1 year, is it bad? So I can live how I live right now for 1 year. I will have my backtesting, I will have my funding a bit later, but this is a part of my profit, of my journey. This is a part of my consistency. And then probably if I will be able to get funded at that time, so I will prove my consistency, probably I will become a bit better. Yeah. And so in 1 year, I can expect better results already with a funded account, for instance. And so suddenly it does not look that bad. Yeah. So, and this is just a small example of how can you continue. So never stop on the things you think and on the things you tell. Now, my part of my plan for today was to ask you about your expectations about your journey overall and education you get from me, from other people. But now I see that probably So I mean, now I see that probably you are not so frustrated like you were while you were writing me. Am I correct?
That's right. Yeah, that's right. And you know, I tried several things, and at first I wanted to test the system in general, if this root of the move things really work, and that's what I sent you times before. And yeah, I saw it really worked. And what I did now yesterday, where I showed you this at the beginning of our session today. This was something where I even tried to make this more reliable and find the reason of what was this, and to have a system or have something where I can say, oh, this trade was probably at the wrong position in the market because of this and because of that. And yeah, this made me feel much better.
Okay, yeah, okay. Definitely, but do not forget that any kind of a concept is just a part of the bigger picture. So root of the move is actually it's just a really small part of what we do, yeah?
Really.
First of all, you will need to gain more experience about the context overall and then continue. And by the way, so yeah, I guess your expectations currently are fine. So we will just keep it. But just remember, always focus on solutions. So even if you present yourself with the problems, again, like I'm not, so my results are not that good for backtesting. Yeah, but again, like 30 or 50 trades, I would not even consider discussing it. Okay, but just because it is everything that we have, I'm like kind of discussing. But for me, it's not even like a beginning. Yeah. So, but. Let's say you have even more trades and results are still not satisfying. So focus on solution. Yeah. What, first of all, analyze what you did. You will immediately see some patterns when about the bad trades, about good trades, and so on. Remember that strategies, there are a lot of strategies that are actually working. So trend lines are actually working. Support and resistance are actually working. But people forget that reading something or looking a video about it or even having these sessions that we have will never be enough. So if you are in other mentorships, or if you even look through the course that I sent you, and everything we do together in the chat, so all this analyze, all this back testing, this is all a part of experience, and your live trading will be like the main part of your experience, of course. I guess shortly, if you will find some time to do backtesting, then you will shortly can move to live trading already. But experience is a huge, so people underestimate it. So you need to spend time in the market, seeing the patterns. So again, while we are talking right now, it's easy. It's kind of easy. Like, you can trust me maybe to some extent. Like, you saw this backtesting you did before. You saw this real nice trend on your USD, which really obviously works. So the concepts really is really working. And I'm telling you this from like 1 and maybe almost 2 years of my trading of this specific strategy. That yes, it is working, but you need much more experience about when to stay out, what are the bad trades, how you need the consistency in the management, you need to learn to hold the trades. to learn to learn a lot more about yourself, about how you react to different situations. So you need to have almost perfect knowledge about yourself to be successful. So you see, the strategy itself is really a small part. Yeah, it's really a small part, and then you need to have this all experience. So, and for experience, of course, you need time, because we just have 5 days in the weeks. I mean active, and out of these 5 days, usually maybe one day will just go by, or like Monday or Friday. Maybe for me, for example, Friday I barely traded, so it's it gives it leaves us with 4 days and so on. So we really need time, we really need experience. Really important. Now, we need to respect the market. Okay, the market is a big place. It's really dangerous. So let me finish my thought about it. So it's really easy to believe in the moment that it all works, that I'm making progress, you know. But then you come to live market, and like you enter a trade, it's a loser, you know. You enter a trade, it's a loser. So let me tell you this: after 5 losers, for example, in a row, all your belief will go almost to zero. If you are not prepared. If you're not prepared. So specifically at that moment, your inner condition will be so much different from what you have now. Yeah, maybe now you feel like a bit excited, a bit inspired. You know, you're looking through my reviews. You see some losers, some winners, but overall it is working. You see in hindsight that it's working, but then it can be destroyed like really fast. And so it's also part of the process, yeah, to keep the faith, keep returning back to good results you have, to some good trades you have, and so on and so on. Now, so what I mean by respecting the market, I mean that people that succeed in the market, they do enormous amount of work. They really make it a part of their professional life. And so we need to respect all, and you know, we need to respect all the pain that the market is causing, because again, are you a part of any community that has a chart, you know?
What do you mean?
Are you a part of any trading community that has a chart, that a trading chart, you know, when people share their trades, like telling about their experience, so on, like in Discord maybe? No?
Yeah, I used to be in some of these Telegram groups or something.
Okay.
But to be honest, I found out that every time someone shared a chart there, you could either believe it or not. But if it is something that you not have analyzed yourself, it is more or less not really useful for me.
So this is one part of the problem with any community. But what I wanted to tell from the standpoint of a pain that the market is causing. So when you go to these charts, you see, for instance, 400 participants that are like talking to each other, sharing the trades, and usually the surface of it all is quite like exciting, you know, everyone is joking, like it's all good. But I mean, I'm almost sure that 95% of the people are suffering in the moment. They are experiencing losses, they are not consistent, and you know, and then someone is sharing their winners, but then no one is sharing their losers, you know, consistently. And it's like a huge problem for many people. Again, I think that's good when people share their winners, and if you are ready to learn from it. But the problems of these charts and so on is that people are not ready to learn from other people winners. They are like envy, they become stressed, and so on and so on. So if you think about it, any kind of pain that you feel from the market, almost surely everyone else felt or are feeling at the moment. And some people it can be really bad. So some people have real life problems because of it. I mean, for me personally, trading brought me a lot of emotional pain, and sometimes it still does. Yeah, but when I started, like during first 2 or 3 years, it was like really bad. I mean, during first 2 years, last 2 years were pretty okay, but yeah, and you need to remember what it can do to you, what it does to other people. So do not buy into this excitement, in the industry and so on. So the industry itself, our trading industry, is a really bad place. So it's a really bad place. I mean, I respect, to be honest, and many mentors, many mentorships. But if we look at the truth, then we need to understand that educational business is a really good business. And so if you have a lot of followers, you can put a couple of trades, a week, and then maybe you have these affiliate links or something like this. And then if you have these monthly subscriptions, you can easily have like 10K or 20K from your group if you have 100 participants or something like this. So just always remember, I mean, I'm also a part of educational business, but I'm like extremely small, and the style of my work, as you could notice, so I'm not, I mean, for me, it's like a side profit, of course, but I mean, I usually extend the delivery, I don't push the students. So I could easily tell, you had 3 months, now finish and buy more packages. I mean, for me, that just does not make sense. And again, to be honest, why I started this one-on-ones is because when I tried to get help from my mentors, usually what I got is like one sentence of, answer. I mean, that's not enough for me. And now compare, when you send me your backtesting, I'm actually going through the video, so I'm actually analyzing.
You sent me a 20-minute video.
I mean, so just always think who is on your side and who is against you. The same way goes with the prop firms. So if a prop firm has a 30-day time limit, then sorry, it's not a good prop firm. Even so, everyone is talking about FTMO. But guys, I mean, I totally understand that I cannot do anything with it, but people, they are just stupid. I mean, if you expect that you can consistently pass the funding challenges that has 30 days time limit, it's pure insanity. It does not work like this in the market. So unfortunately, I really don't like the industry overall, but it is what it is. We just need to respect the tragedy of it all, and we need to put the effort, to put the work to be better for ourselves and for other people as well. Okay, so this is about the industry and about respecting the market. Now, think more about how beginners behave in the market. So if I was just preparing for today, and this is what comes to my mind. So what a usual beginner do? So they add to losers, move stop loss, they become angry, become emotional, focus on profits, change strategies, blame others, rush the trades, over risk, over trade, break the rules, do not backtest, do not analyze their past performance, change mentorships, and so on and so on. So, and this is just a small amount of what beginners do. I will, I plan to record a video from my Forex funds analysis. They analyzed their losing accounts, their winning accounts, some really interesting statistics there. But if you can identify what beginner is doing in the market, just do the opposite, So we know for sure that beginners, so you can know if in front of you is a beginner by the questions they are asking and overall by how they are talking. So they are like overexcited, they are looking for this next setup, and then when they have a winner, they are posting like something like eating it, like pumping up, like to the moon. So this is obviously a beginner's mindset, and the problem with it is that it is all happening in the moment. So there is no long-term vision, and then when he will have a loser, he will immediately be like destroyed. So I also like very much affected by losers, but now I can cope with them much better. You know, I'm still I'm far away from being like a great trader, but I have some consistency, and I put like enormous amount of work with myself to be at least at this kind of things. And again, I constantly returning to how beginners think and what they do, and I do the opposite, you know. So I know for sure that beginners does not have the power, the energy to backtest. They just do not do it. They do not work with their journals, you know, with their trading plans. So they do not analyze their trading plans. They do not transform them and so on. So when think about it yourself and do the opposite. Now about the rule following overall, remember, if you will feel good about making profits, and if you will feel bad about losing profit, which you will do, of course, we all feel good about this and bad about that, but the other part where you can have joy, I think maybe we discussed it with you, but where you can get joy from trading is by rule following. Yeah. So when you will have your checklist, your system, and when you will go through this rule following challenge I mentioned in the first part, you need to, and you know, you tick the days that today I was good. No, today I was good. And then I was good with profits and I was good with losers. So my losers were part of a system. I follow the rules and I feel so. This is exactly how consistency looks like when you are able to execute. And profitable traders, they are just able to execute some system for a long time and to survive, to gain experience. So when you can have some part of your enjoyment from your trading, from rule following, you will feel much better. Yeah, because again, profits are just a part of trading. Because if you think about it, trading is it's about like a self-improvement, you know, working with yourself, knowing yourself better. I don't know about you, but when I started trading, like I discovered how greedy I am, you know. I discovered how selfish I am, how I am like focused on myself, how painful it could be to lose money. Yeah, because like maybe someone thought that he is not like so focused on the money or something like that. And you know, I found like how dependent I am on my performance. Yeah, so and so on and so on. The envy. Yeah, you discover how envious can you be to other people or something like this. So when I started trading, for example, I discovered a lot of negative things about myself. And most importantly, I discovered that I actually can't stick, I cannot stick to the rules. Yeah. And again, I'm sharing it like really freely because I know that it's true for many, almost for anyone.
Yeah.
Because it's just of the environment. Yeah, I know people that some people are better at it. Some people are not so good at it. But overall, then you start to work on yourself. And if you think about it, then the work with yourself is takes much more time even than work with the strategy, because again, working with a strategy is like making yourself to do this work. Maybe it's boring, maybe it's hard, but you do it. So you work on your like on your will, on your time management skills, and so on and so on. So profits are just a part of it, and you need to start thinking widely about all that that includes into it. Now, by the way, yeah, okay, and it brings us to the next point, which is connected to the first one that I started in the mindset. So framing, framing and reframing what you are talking to yourself. So for instance, you think you are like afraid, maybe after some losing streak, yeah, you're afraid that your next one will be a loser or something like that, and you are again starting to think that everything's bad, like, you know, you start to feel bad, and you need to continue to think and try to reframe. So for instance, if this day will be a loser again, yeah, so if I'm thinking to myself, this day will be a loser, or this is not looking good, you know, I need to ask myself, but okay, how can I make this day a little bit better or not catastrophical? And I have my answer right away. I can put efforts into risk management. I can pick only the highest quality setup, for example. I maybe should implement daily limit loss or something like that. Now, if I notice that, okay, I am not focused, you know, people come like to mentors or to groups and say, oh, I'm not focused, I'm not disciplined. So what? So now you need to reframe. So you need to ask yourself, okay, so how do I stay disciplined? How do I stay focused? So maybe I need to, so what could be the option? So first option could be, I need maybe to trade less, yeah, because if you trade all day, then of course you will lose your focus. Maybe I need to trade only during New York, or maybe I feel that after sports I'm more focused, and so on. Yeah. So on. Sometimes it makes sense, you know, if you're thinking like something, okay, these are bad results, or not only not this one. Let's take from your words. Yeah, you said this about backtesting. Yeah, these results I'm not satisfied with it, and you said something like this: live results would be even worse. Yeah, so is it true or not? Is it true or not?
I think maybe it would be definitely different. I think probably not worse, because at backtesting, I think sometimes I rush things too quickly. I want to go on, and I don't give myself the time to do this the analysis properly for this specific setup. And I think in the live market, it is more about patience and more about waiting until price really comes to your setup. So I think there is definitely a big difference between backtesting and live trading. And yeah, I would say it's different. Backtesting is definitely helping you a lot, because you're getting to see the process, and you can set up your rules to develop your process that you want to follow.
Yeah, but this is something really interesting you said. You see that you will have more time to analyze in the live markets. Yeah, you will not click through the price, so you will spend more time in the moment. And actually, this is something that works much better for me in the live environment, because I see exactly how the price is moving in the moment. And to be honest, sometimes I personally have better results on live trading, but only sometimes. To be honest, for me also backtesting is a bit better, but only because I'm managing much better on backtesting. Why? Because when you have a winner that is moving, you can just click through the candles and they will hit your take profit like quickly, you know. But in live environment, for me, when I see the market that is almost at my take profit, so sometimes I tend to close early because I can't like wait and so on. So, but it's not it's just what you think, you know. You don't know if your results can easily be better in the live market. Yeah, and now again, remember you said, so you see this text, yeah?
Yeah.
So these are your words, and by the way, you can read something here and try to imagine that this is a friend talking to you, yeah? And what are you feeling about this? And for example, you just say, I will never reach funding with this result. Again, you need to ask, is it objectively true? And then next, your question should be, what should I do to reach it? Yeah. What exactly should I do? So you need to develop your own understanding, your own systems, not only trading systems, but your own systems overall, like you started to do in the beginning of the session, what you showed me. This is just a start. Exactly like this, you need to think about your mindset and formulate your own solutions and your own ways of thinking about it all. Of course, using what you like get to know from outside world. Now, this, to be honest, in the moment when I read it, I like became a bit angry. So I needed I needed to put effort to be more patient and trying to explain it. But you know, we like worked on the mindset, we discussed, something, and then some parts of what you write me is just how beginners will tell, but you are not already a complete beginner and you are like working on yourself for some time, so you do not need to allow these kind of things to happen. So I'm not telling that you need to block them, but you need to work with them like you work with the trades. So you need to realize what is happening. So for example, I don't like if there are complete weeks with no trading and I would just sit at the charts and get mad. Then my question is, first of all, when the market is in bad condition, how do you think, so let me go back to the chart. Let's take some kind of, I don't know, maybe Euro GBP. Where is the price? So you see the chart right now?
No, I see.
Oh, no, you don't see the chart?
Telegram.
Maybe something like this. So probably now you should see the chart, no?
Yeah, no.
Yeah, okay. So, you know, sometimes, so for example, you open a daily chart and you see this kind of price action, you know? I mean, does it take a whole day long to understand that probably this part will be really hard to trade, you know? So you just look at the chart for 5 minutes, maybe go to 4 hours, you know, 4 hours is just back and forth. So you understand immediately that maybe you can try to buy from here or something, but basically in 5 minutes, you will come to conclusion that you need to do this. Basically, you need to do this. Alert. Oh, I can't put alert on backtesting. Okay, so imagine that this is something, or this market. You understand that, okay, this down move happened, buying from here, does it make sense? Just in 1 second? No. Yeah. I mean, it's just a bearish market, but we already kind of missed the down move. So you could say this, okay, I will sell from this point. So you put your alert, and then if the market will break, I will just watch what it will do. And that's all. So you just put your alerts, you connect your trading view to your phone, and then you can go and do something else. And you just wait for a better conditions in the market. So usually bad conditions, they are obvious. And then you just skip the day. So if the conditions are bad, you will skip the day. And if the conditions are good, you will show up on London session or on New York session. And then you will trade for several hours. And that's all. So actually there will not be this situation where you just sit and get mad, because you will not get mad, because you will understand that the context is bad. There is just nothing you can do here. So this
one question for this. I saw in your backtesting, in your weekly recap videos, that you are trading a lot of different pairs, and I thought you would only have a few ones to.
So actually, so 90% of the time I trade in Euro USD or USD JPY.
Okay. I saw, for example, I saw a trade in US 500.
And then 5% of the times, so this is my watch list, you see, yeah?
Yeah.
So sometimes I go and see what's happening on these indices. And then sometimes it just, for example, so GBP USD and Euro USD is pretty much correlated. But sometimes one is more clear than another. And I will trade it.
Yeah.
For example, GPY pairs, they also a bit correlated. So sometimes GBP GPY is more clear than USD GPY or something like this. I almost never trade AUD USD, almost never trade gold, only sometimes. And basically that's all. So my watch list is like 5 or 7 instruments.
Yeah, I saw also on one of these weekly recaps you traded gold, and I think it was not that good. And I thought, why are you doing this?
I mean, you see,
Because gold has such crazy moves sometimes.
Gold is pretty hard to trade because, to be honest, there is a different strategy. I'm learning right now, but I'm not sure that I will use it. That is more suitable for gold, for stocks, and so on. So for the markets that are doing this, then this, and this. And you enter here, for example. Yes, definitely gold, silver is pretty hard to trade, but sometimes I get to trade. And by the way, so again, for this week recaps, you need to be like really critical about what I do there, because I make a lot of mistakes there. So you need to separate. But when I do mistake, I tell, and you know from quality, and you will see yourself that this was not a good entry. And then I explain like my excuses, why I took it. But what you need to learn from these weekly recaps, first of all, good quality setups. There are some number of real good quality setups. And you need to learn from my mistakes, because you will see a lot that when my idea is starting to fail, I tend to enter so it is obviously failing, but instead of accepting invalidation point, I go and try to force the trade, and in most cases it just does not work. So you can just see it in an experience of another trader, of me, and then maybe in your own trading you will do these mistakes a little bit less. So of course I hope that you will not do it, but probably you will do it. We just need to prepare ourselves for the mistakes. And this is something, again, I told you in the first part, that leave the room for mistake. Leave the room for mistake. Allow yourself to break some rules, maybe to make 1 or 2 emotional trades. That's fine. So you do not need to be perfect. You do not need to be perfect. And then if you will be profitable with this kind of performance, then it's really easy, because instead of like finding new strategy or working on a higher risk to reward, you can just work on eliminating some of bad trades, and then your results will be much better. Okay, and then, so this is for alerts. And not sitting in the chart. Then you say, that confirmation never shows and big move already started. So this is a big problem that people face. But again, you do not need to accept this as a truth. When you will backtest more, when you will have more experience, what you will realize is that when the move is happening, when the real move is happening, it will not do something like this, okay? Like this, and that's all. No possibility to trade. It's just not working like this. So for example, for me, this is a one move, okay?
Yeah.
If I didn't enter here, I maybe could enter here. And I tell you that a lot of people, they benefited from this move in one way or another. But the problem is beginners. So a beginner's mindset is that they want to be in a move from the bottom to the top. It's not possible, and it's not needed. I mean, okay, it's possible, but it's not needed. It's not needed at any extension. I mean, that's crazy. It's a big it's a big problem with the trading is that it has unlimited possibilities. Okay, so when we are looking at the charts, subconsciously everyone realizes that they can have so much money from this market. Yeah, they have so much they can have so much freedom from the market. Basically it could solve any kind of materialistic demand that a person have. So it's unlimited environment. And so when we subconsciously understand it, any kind of good result that we have, we think about it less. You know, so this is a big problem, that traders are not satisfied. They are not grateful for what they have and for this consistency. So again, consistency is always better than profits, because with small consistent profits, again, if you want to trade, you need to plan for 10 years ahead. Yeah, you need to see, okay, maybe in 20 years you do not want to trade like you do now, but maybe just because you made so much money that now you invest it maybe in real estate or something like this. Yeah, or any kind of other things. But overall, you need to understand that you need, at least in the beginning, you need to be consistent. Yeah, it could be 0.5 or maybe per week, or maybe 2% per month. But guys, 2% per month is fantastic results. You do not need more. So if you can replicate it consistently, this is stoppage, full stop. Okay, you don't need anything more. But people do not stop. They are like crazy. So they twist their minds, and now they want 3%. Now they want 5%. Like, what are you doing? Just stop and think and appreciate where you are now. So yeah, this is unlimited possibilities are a big problem for the mind.
But I think it also depends on, I mean, I agree absolutely that you say 2%, if you reach this consistently, this is good. But it also depends on how much risk you take for this 2%. I mean, if you risk 2% to get 2%, then I think it's probably not that good, and you should then have only a small risk of, let's say, as you said, 0.25 or 0.2%.
Yeah.
With this, you should reach this 2%.
Yeah, definitely, you're right.
Because then it would be almost exactly the same if you risk maybe 1% and reach 10%. And so you know the relation between these two should be healthy.
Yeah, definitely, of course. So even if we have percentage target, then the question is how it reached and what kind of RR do we have. So is it 1 or is it 10, for example? Then 10 it's better.
Yeah.
And
you know,
by the way,
especially here in Germany, I see a lot of traders, or you read about them in Facebook groups or something, and they take a lot of risk, and they also do some of these beginner things like adding to trades or averaging, layering, and so on, and they are somehow profitable, but they risk enormous amounts, like 10 or 20% a month, to get something like 4 or 5% a month as profit.
No, do not read these traders.
This is crazy. And
yeah, I mean, but again, to be so just like to keep it real, if they are making 4% a month, and if they do it like for 5 years already consistently, then maybe for them it's okay. So again, trading is a complete freedom. So there are so many ways to trade. Some traders, they can go like all in, you know, and it could be nice, but everything I discuss here should be treated like, you know, for most people. So there always will be some exclusions from the rules. There will be some phenomenal traders, you know, that just can do things that no one else can do. But what I'm trying to teach you, of course, and what I'm trying to communicate here is a consistency that could be acquired by many. So that's why we are working in this manner. And by the way, we can also discuss about this funding thing is that it's it's really important, the style, the style in which you get your funded account, because many people do get funded account, but in bad style, and it plays a bad joke. And again, when you have your profit, ask yourself, is this profit part of my system, or is it just like more random profit? And then you need just to reanalyze what you did. And by the way, so when you have a big move, again, usually based on my experience, and I'm sure you will see it too, you will have several possibilities to enter, like from a good quality move. And it's just like it is. But missing a move, doing some stupid mistakes, getting a loser, it's all a part of our system. So missing a move is a part of our system. We are constantly, so during this session, we already missed a lot of moves on the market. So there are a lot of pairs. We had some moves today from USD JPY in a bullish context. So maybe something from here, we already missed it. And so, but we didn't want to trade. So how do you feel about this missed move? I mean, do you feel anything? I mean, I do not feel anything right now, but if I went to the market in the morning, and like I needed, so this is a condition that I know about myself, that when I want to have a trade, when I need to have a trade, when I have my plan that today I need to have a trade. For example, like I'm looking at the zone, and now I'm slowly starting to talk to myself, okay, this should work, the market is bullish, let's try to have a trade. But then I look at the session, now it's Friday, like New York, maybe some news, and then I try to fight myself, and then I enter like something like this, and now you are like real emotional. But in fact, while we sleep, while we eat, while we just live, we are constantly, every moment, we are missing a lot of opportunities throughout the market. Maybe something in the crypto. So it's and if you realize this, that it's happening all the time, so 100% of the time we are missing moves, and everything we need is maybe like 5% of everything we missed. So again, in this move, so almost how much time, I don't know, let's take this, so 90 days, in 3 months. In 3 months I had maybe like so I had some trades on USD JPY to the bullish side. Some of them worked out, some of them were losers, some of them break evens. So again, some traders on the daily time frame, they could enter here and maybe target this one, or maybe this high are targeting still, and they are just sitting in the trade. Maybe some bank traders, I don't know. So some people just benefited from this move, some people benefited from this small move, and that's fine. So again, and then you just work with your system, and you start to notice that maybe you want to hold your trades more, and you start to change your management a bit, maybe to go to higher time frames. By the way, this is something I noticed from experienced traders, that they started from lower time frames and they move slowly to higher time frames. They hold the trades more, and so on. So that's all fine. So missing a move is fine. I mean, it's really easy to tell it. Like, some people tell like losers are fine. Yeah, we know it's fine, but it hurts. It hurts a lot. And you basically, I mean, there is no way you can go around it. All we can do is just try to not allow it to affect what we do, or not to a big extent. So so again, it's all coming down to not accepting what you are thinking in a way you are thinking, because the first thought that you are actually producing is basically automated reaction from something, and you need to work with it. Now, and of course, this one we discussed, that, like you said, it's bad results, when it's actually not. It's actually not bad results. That allowed you to pass the challenge. And I think when you will backtest, you can easily have something like this, and even in live trading. So that's fine. Okay. So we can skip this. This is making your joy from rule following, and some some quotes just for yourself to think about is that the cause of pain are usual expectations. expectations are a big thing. So again, what I propose you to do is just to let go some expectation or to make them smaller, and just focus on your style, on your work, on your backtest. Expect you will do it, you will get your funded account, but you just don't know exactly when it will happen. Okay. Yes. Now, yeah, we will skip this one. And I like this quote, is that a positive winning attitude, so this is from Trading in the Zone, is expecting a positive result from your efforts with an acceptance that whatever results you get right now are a perfect reflection of your level of development. So, and what you need to learn to do better. So again, if you have this result, then this is a reflection of your current level of development. If you want better, continue to work, continue to analyze, and you will get better in general. Okay, basically that's all I want to discuss today. The only thing I wanted to ask you is maybe rewatch some parts of our session about the mindset, just remind yourself what we discussed, what kind of questions we asked, because it's really easy, to continue to watch other videos, to read, but it's always important to come back. So for example, in my main mentorship, when I learned what I learned, and when I found consistency, so first I watched everything, I watched everything. I just spent time, then I practiced, backtested, traded, and then I felt that I kind of need to go back to the basics again, I went to the basics and rewatched the course, but not everything, just some parts that I needed to. Then again, and then I rewatched for the third time, same situation. So how do you think beginners do? I guess beginner, they will, instead of rewatching what they already know to deepen the understanding, they will probably go and seek something else. So really think about what you do, and I will send you homework. Okay, first homework will be to analyze the pair based on this checklist, but ignoring this additional context. Then second one will be starting to backtest. Can you tell me how realistically that you can backtest more, and do more during next months?
I think I can.
Yeah, but you are but you don't have too much time, for this.
I have to make some time. The problem is sometimes, especially the last weeks, as we also had a lot of public holidays, it was very, very stressful and busy at my work.
Okay, yeah, I guess.
The company is really successful, which is a good thing, but if the company is really successful, they want more products, they want more development, and so on and so on.
Yeah.
So we have a lot of new products that should be brought to the market, and as I'm part of the development team, I have a lot of work to do then.
Okay.
I mean, I have to. This is one of my problems that I have to face, and I somehow have to make room for trading and also for learning trading.
Yeah.
And yeah.
Unfortunately, of course, I can't give you additional time. But what I can say is that, remember, you will need maximum effort. So, probably you will not see it. So you will need maximum effort in the beginning of your learning. Okay, so when you are starting to trade, you need to show more effort, and then when you will really get this specific strategy, you will not have to spend any time. So for example, for me right now, I'm backtesting time from time a bit. But if you compare to how much time I spent in the beginning, it's just nothing, So I'm just trading, and that's all. And sometimes working with the students. But in the beginning, it's really hard. But then the more you go, the easier it will become. So maybe if you can take some kind of a vacation, something like this, and just spend 1 month really, really actively learning, then it will be okay. And what the other thing I wanted to tell you is that when you are here, if you stop learning, it's much easier to forget everything, okay? But then if you are here, you are already you spend so much time with the strategy that even if you are like miss 1 year, you will probably be at the same time. So but here you can forget some detail
by heart, and you know what to do.
Yeah.
You know, for me is not like I think I need to take some holidays for this, because this is also some other problems that then because I still have to do the work. I think it's more like being consistent also in the learning. So that means I rather go and take 1 hour every day, even if I'm a bit tired, and then sit there at least 1 hour to learn something. So, on the weekends it is oftentimes is very good, because then I'm fresh, and I'm not tired, and I can learn in the morning. And learning in the morning is best thing you could do.
Yeah, to be honest, Tim, again, I'm really trying to avoid because I know how vulnerable people is, and how easy it to when you criticize someone, it's really easy to have to cause the pain. But you know it for yourself, yeah, that sometimes when you had like a task for backtesting, it could take like a long time for you to do, while in reality it could take like maybe 2 hours. So, of course, I mean, I really do understand that you have the work, and I mean, that's really great that you are still pushing through the learning, but this is just the reality that definitely the consistency in learning, especially in the beginning, is really important. So I really don't know how to go around it. You need to find the solution yourself. But if you have the time, so you have a limited time, your first priority right now should be practical work with the charts. So not reading Facebook, not watching videos, not learning anything additional. Master the strategy we worked with you already. Learn to backtest properly. So learn to work with your journal efficiently. And this is your priority, backtesting, okay? You will not learn so much, and then live trading, okay? So trading itself is the best learning instrument right now for you. Do not forget this. Now, do you need any kind of recommendation for further education in the mentorship? Because if you do, I have only one recommendation.
You mean for learning, or for watching something?
Yeah, maybe like so in short, I usually, and by the way, just a bit of inspiration from other students, from the Zoey. I mean, when I gave her task, she just said and did it, and I say, okay, give me next. So it's really working, learning is working. So do not forget about it. Now, if you want any kind of further education, so of course we can work more, but not now, but maybe in several months. If you will need me, if you will need my assistance, maybe in several months, you will go for a prop firm and you will need my support for some time, then you can contact me and we can continue working. But right now it does not make sense. If you want to learn like more about our strategy, not all, but a significant part comes from MentFx mentorship, which I really like. So I'm also part of his community. I'm not affiliated to any, so I will not share links, or something. But this is something that really helped me. The problem with his mentorship is, of course, that it's not one-on-one, so you will have to find answers in the course. He shares his trades, but again, it's not that helpful if you don't have too much time. And the course is like really, really big. It's like really big. It's hundreds of webinars and so on. And I'm because of your situation, I'm not sure that it suits you, but maybe it's something that you can check out. Basically, that's all that I can recommend. But before that, make sure to see all weekly recaps, okay? They will be updated, and I will update this course overall, maybe with some models. But basically, we discussed everything you need to know right now. Okay. Yeah. So
I think it's better to listen to your recaps, because I remember I watched some videos of MentFx before, and he really talks a lot
oh
sometimes.
yeah. He has a lot of he talks a lot, but when you are going through the course, I mean, to be honest, I was angry at him a lot of times, because of I spent so much time watching the content. And by the way, this is why I started these weekly recaps, because I felt that this may be useful, when you just discuss the trade and that's all. You do not discuss anything else.
Yeah.
But again, somehow I really found consistency through his course, because I spent so much time watching at his charts that and listening to him. And by the way, he is a phenomenal trader. Okay, he's like really good. He's really good. And by the way, there are a lot of other mentors like Photon trading, a lot of others, and this is a time where you need like to really try to feel, is it a good fit for you, because I felt like that he is a good fit for me, and I spent a lot of time in the community, like learning, and it really helped me. It really changed a lot. And I think so you can do it. Okay, you definitely can do it, but you need to find a solution for the time for learning and for the time for backtesting.
Yeah.
Okay? And if you will need anything additional from me, we are in the chat, so let's keep in touch. Okay, so I will close the order on Fiverr today, but again, we just continue to work, and I will push you through some homework. Okay.
Yeah, that's great. That's great. Thank you. Thank you very much. I mean, you already did so much for me, and I think it is already worth so much more than what I paid at Fiverr. And so
I really want this effort. So again, both you and we put a lot of effort through the last month. Okay, let's make sure that it will pay out. Okay, so do not forget everything we discussed. Like really try to change yourself a bit, just a little bit.
Yes, of course.
And let's try maybe in 1 year, maybe let's try to reach funding in 1 year, or maybe in 2 years. It would be good, I think. Okay, team.
Okay.
It's a long session. Now I just need to drink a lot of tea.
Do this.
Yeah. Okay. And we'll send you homework soon. Have a good day. Bye.
You too. Thanks. Bye-bye.